Hey guys, so we just analyze the trade right now. You can see we took the massive buy from here to here using trend line. Okay, so you can see it's a real account. A trade is currently going, and you can see I just took this money. So I grew this account from I think $9. Now it's 18.20, and I'll keep on growing it. And it's a simple strategy I use, which is a trend line strategy. So first of all, if people have been asking me this question that for currency pairs are those with little accounts. So if you have a little account, I advise you use the micro. So you can just search for it. So this is the normal. Okay, this is the normal forex pairs. Okay, so this one they are not suitable for little accounts. So if you have a little account, I advise you go for the micro ones. They still move the same way if you are seeing, but it's just micro, meaning that the leverage, okay, is different, and you can use very little lot size, and you can see you can even go, even a $3 account, you can use and trade this type of pair. You can even go 4 trades losing, and you will still be, your account will still be safe. So this is the best for little accounts, the micro pairs. So let's move on to the video. So what you do is that when you want to analyze, you go to the daily time frame. So I'm going to move to the daily time frame. I'm not actually moving to analyze. I don't analyze on the daily time frame. Okay, I don't analyze on the daily time frame. I just see daily time frame to see the bigger picture. So I used this daily time frame, and okay, you need to add moving average. You need to add 200 exponential moving average. I'll tell you why you need to add it, the usefulness, but you need to add the 200 moving average to your charts. Okay, so when you add it, so we're going to use the moving average to know the direction of the trend. So for the moving average, if price is above the trend line, it means it's in an uptrend. If price is below the trend line, it's in a downtrend. And if it's just ranging like here, you can see it's just going back and forth, just testing the trend line multiple times. So it's in a ranging market. Okay, so you can even see here if we plot. So you can see here. So you can see that with the moving average, you can see price has been breaking the trend line, the moving average, 200 moving average. So you can see it's ranging, and you can see this is proof that it's ranging until later broke out of the range, and it's now in an uptrend. Okay, so currently at this point, I knew that it's in an uptrend. So that's why I switched to data frame to see the bigger picture, and you can see it's in an uptrend. So in an uptrend, we'll be looking for only buy opportunities. Okay, so we'll now go down to the lower time frame. So when I switch to 4 hours, you can see that price has been selling. It's not advisable to sell because it's in an uptrend. The overall time frame is in an uptrend, so we'll be looking for only buy opportunities. So you can see price has been selling, going up and down. It has been ranging. So I was looking for only buy opportunities. So I noticed that okay, it was selling, okay, but you can see that price ranged a bit. So when price range a bit, you will connect trend line. I plotted my trend line. So to plot trend line, you need to connect at least 2 touches. So but you can see the first touch, second touch, and the third touch. So at this point, I knew that okay, price is ranging. So you can see that it's currently in a range. Okay, it's currently in a range. Okay, and we're on uptrend. So I'm looking to only buy. So when price was here up, I can't take a sell. If I took the sell here, it played nicely actually, but to just be safe, I'm only looking for buy opportunities. So I waited for price to come to this trend line level. Okay, so when price touched the trend line level, so I went to my low. I went to 1 hour time frame to pick the entry or confirmation. Okay, so in the 1 hour time frame, so when price touched this trend line, okay, I knew that it's going to buy. Okay, So you can see this. Let me show you guys something. You can see that people that also follow this pair, when they take their buy, they will put their stop loss, okay, maybe exactly below this trend line. Okay, so you can see that price actually broke the trend line, stopped many people out with their stop loss. You get, so this is why is trading financial markets is quite difficult, because you see a nice setup maybe around here, price will just break out of the structure, hit people's stop loss, then move in the right direction. You'll be frustrated. So to be safe, you're going to put your stop loss exactly below the previous market structure. So you can see that this is a nice, see, this is where I set my stop loss. So you can see that this, you can see this, you can see this market structure here. So I put my stop loss below the wick of this. Because of this candle, I put my stop loss below the wick. So you can see, so that I'll be safe in case you get price want to actually come and even retest, because this is actually a support zone, and you can see I bought here. So I knew that price may actually come down to this support zone. So that's why, to be safe, I put my stop loss below this zone. Okay, so that just to be safe. Okay, so I know you'll be asking, okay, what's confirmation? Why did I take my buy at this point? Okay, I took my buy at this point, okay, because of this engulfing pattern. So when you've analyzed on the higher time frame, you switch to the lower time frame. This is 30 minutes, so I switch to 30 minutes to look for my entry confirmation. Engulfing, bullish engulfing was formed here, so that's why I took the buy at this point, and I set my stop loss below the market structure zone. And you can see it actually played. You can see it's actually, it stopped many people out. Okay, so you need to look at the bigger picture. Don't just go to higher time frame. Look at the bigger picture. Look at how market is doing. Okay, or the zones market may actually test, okay, before retracing. So I think that's the main reason. And why I hesitated here. I hesitated here because I used a tool called Fibonacci. So I use Fibonacci for my TP. Okay, so you can use it too. So at the 61.8, so you just connect the high and low, but I'm not connecting low, I'm connecting where I took my trade, my entry. So around this point, so I need, okay, that's because price always, most of the time, let's say 70% of the time, tend to react to either 50% or 61.8%. So you can see that it reacted to this 61.8 and is already selling. Look at the 15 minutes chart, it's already selling. It may not sell for long, but it will surely react to it 80% of the time. Okay, so that, just to be safe, I don't want, because there are more trades to take. Okay, I don't have greed. I can't be, you need to overcome greed, because waiting for it to touch this uptrend line, I don't know, but that's me. So I set my stop loss to 61.8% retracement zone, and you can see that 61.8% retracement level. I can see that I hesitated trade, and you can see the trade played out nicely. So that was really how I took this pair. So first of all, go to daily time frame to see the direction of the trend. It's an uptrend using moving average, or if you want to use mirror, you can just use your eyes and see. But to be just a second confirmation, you can see that you can use moving average, 200 exponential moving average. So as price is above the moving average, it's in an uptrend. So we're only looking for buy opportunities. So you switch to the next lower time frame to look for just your price action. Just do your normal price action analysis. So I use trend line, okay, just to connect and see, because I saw prices ranging a bit, so I just use the trend line to see, okay, I'm going to take the range, but I'm not going to take the up, okay, the sell range. I'm going to take the buy, like the lows of the range, because it's in a bullish trend and I have to be bullish too, so I have to buy. So I waited for price to come down to this trend line, and before I take the buy. And I also took note of this support zone, so that's why I plotted the zone. So for my entry, for the stop loss, I set my stop loss below the support zone, where the support area. And for the entry, you can see in the 30 minutes bullish engulfing was formed and I took the buy. And okay, the TP, I used the Fibonacci, just connect the high and low. If you don't connect the low, you can connect where you took your entry, but it's advisable you connect the low, so from the high to the low. And your 61.8 is always my TP level. It's always my TP, and it has been making me, I've been growing these accounts, so I'll keep on growing it, and I'll be updating you guys on the account. And okay, I hope, okay, next, not every time is this analysis or something play out, because some people will be frustrated. What's the issue? Well, that's how FOREX is. You can't win all the time. In fact, you can have 3 back-to-back losses, okay, but the main goal is that you must make sure that one win trade cover about maybe 2 or 3 loss trades, okay. So that's how I've been growing the account, because there's some time I'll lose 3 times in a row, 2 times in a row, but one win I've gotten all the profit, all the losses I've made. So that's how. Just be patient. Don't see it as a get rich quick scheme, okay. Just be patient, take it step by step. Just be patient. So no matter the account, some people may say that small account is too limited. If they give you a big account, if you cannot grow a small account, you can't even grow a big account, because you're still going to use the same trading mentality and you're still going to end up blowing the account. So you get, so big account, small account, nothing is limiting you. If you can grow a small account, you can definitely grow a big account. So don't let your account size limit you. Like now, if you start with $20, you can make sure that, okay, for a trade, you will not risk, your stop loss should be nothing more than $3. So you can see that for you to lose all the accounts, you need to lose more than 6 times in a row. So even though you're trading with your knowledge, you can't lose more than 6 times in a row. Then $20 account is, just be patient. $3, you must not lose more than $3, and your TP between $6 and $9. Just keep on trading, and I assure you that the account is going to grow. It may take time, okay, but with time, just look at in a week. So let's say you have a 50, let's say you're trading, your win rate is 50%. Let's say for every 10 trade you take, you lose 5, you win 5. So if you lose 5, that's 5 times 3. You risk $3. So 5 times 3, that's, you've lost $15. And so that's if you lose 5. And if you win 5, that's, let's say your TP is $6. So that's $30 you've won. So even with a 50% win rate, for every 10 trade you take, with a 50% win rate, for every 10 trade you take, you are going with $15 profits, even with risking $3 per trade. So if you have the good trading idea, you can grow any account, okay. So just I don't know, keep on trading, and I wish you guys good luck. And if you have any question, feel free to ask in the comment section. Thank you.